then what do you do for your savings? If you're going to save in money, and everything else you can do in fiat. But if you're going to have a bank account, you become your own gold standard or gold and silver standard and put those coins away. The amount of mining and the amount of recycling produces about 1 billion ounces of silver on an annual basis. But the total demand on silver is 1.2 billion. We're running a shortfall of 200 million ounces on an annual basis. Round numbers, it's varied about that amount for the last 4 years. So that's an 800 million ounce amount of silver that's had to be eaten from the above ground stockpiles. So the above ground stockpiles of silver is actually going down at this point.
This is an audio recording of an X Space courtesy of thecoinrepublic.com, the go-to place where you can keep up to date with what's happening in the crypto space.
Tokenmetrics AI analyzes millions of data points to uncover hidden gems, delivering buy and sell signals you can trust. Our AI spots tokens before they moon, helping you stay ahead in the fast-paced crypto world. Join tens of thousands of investors who've taken their portfolios to the moon and beyond.
Hi everybody, welcome to the Crypto Pulse. This is Crypto Rich, and I am pleased to be hosting this weekly X Space courtesy of the Coin Republic. And in a few minutes, we're going to be joined by the original, the one and only silver guru, David Morgan. And he's going to be talking about gold, silver, Bitcoin, and money. What is the difference between money and currency, and why is gold, silver, and Bitcoin money, and the dollar, the euro, the pound, they're not money. They're not money. The rupee, the real, none of them are money. So we'll talk about that. Now, before I introduce him, I just want to remind everybody that none of this is investment advice. Do not invest in anything that I ever talk about on my channels or anybody else ever talks about on any channel whatsoever without doing your own due diligence. You and you alone are responsible for any financial decisions or investment decisions that you make. We're recording this on Saturday, the 31st of May. Go check out thecoinrepublic.com. Please also follow them on X, and you can do so by clicking on their icon and following them and getting up to date on the latest in the crypto world. And just a little bit about David Morgan. He is been investing in gold and silver and real money for many, many years. And when I first started learning about money, gold and silver many, many years ago, I came across David Morgan, and I've learned a lot from him about the difference between money and currency and the value of money versus the fake value of currencies. All right, David, I see you've now become a speaker. Do you just want to unmute yourself?
Hello, it's good to be back. Thank you.
Yes, David, you say it's good to be back. This is actually not my channel, although I will be posting this on my channel. This is the Coin Republic. I'm so glad that you agreed to do this because it's always great talking to you. Do you just want to say a little bit about... Sorry, David?
No, go ahead.
Okay. I mean, we don't have visual cues with this, right? We do when we record videos together. Do you want to say a little bit about yourself and what you do and where people can find you?
Certainly. The easiest thing to do is to find the website, which is not very hard. It's themorganreport.com. And when you get to themorganreport.com, then the tabs at the top, just go to the right and it says About. If you hit the About tab, you'll see my biography. There's a CV buried down there somewhere. And I'd say most importantly, if you scroll a little bit down, you'll see a link to a free movie called The Four Horsemen film, which is, I think, 10, 12 years old at this point. But it's a good refresher for those that are aware and alive and awake. And for those that are kind of on the edge or not certain or wondering what's happening, it's really a good film about the rise and fall of empires. And this is cyclical. It's happened again and again and again. And the end of the American empire really is taking place before our eyes. So it's a good movie to, again, get kind of the big picture and let's say a very unabrasive way where you can just kind of kick back. Film's not sure. I know it's more than an hour, but not a lot longer than that to my recollection. So I think that's best bio I can give you. We've done that a few times, so we'll just leave it at that.
Great. Okay, and people can also click on your icon, on your little picture there, and that will take them to your X account, which is at silverguru22, and you can follow David on X. And then through that, you can also get to themorganreport.com. Great. David, where do you want to start?
Whoa, boy, that's a tough one. I think I love to go from top to bottom. As a analyst, looking at the silver market as an example. A top-down analyst would ask the question, is silver even important? So you'd start, with the ultimate picture would be silver itself, and then you go from silver to, well, what kind of silver markets are there? Then you get into like top tier silver companies and the mid tiers and then the juniors. So from the macro picture, I mean, we are at a point where myself and many others in this genre have forecast we would be. And this is where more people than ever, are asking themselves what you outlined at the beginning. What is money and what is currency? They're looking at money as failing. Failing how? Well, failing to purchase the goods and services they need on a daily basis at the same value that it was recently. So in other words, going to the grocery store maybe a month ahead, they intuitively know, or they've recognized prices just keep going higher and higher and higher, and yet their wages are staying the same, and in real terms they're actually losing. So this is when you get to the point where I posted this morning on my X account, crack up boom, and I won't go into it in great depth unless you want to dive deep, but it's basically where that question starts to occur more and more and more. And what a lot of people don't recognize is that for a huge paradigm shift to take place, it's not a majority rule kind of a thing. It doesn't require 51%. I mean, based on a lot of statistics, these are guesstimates, but good guesstimates. Like the Revolutionary War was like 3 or 4% said, hey, we've had it, taxation without representation is tyranny. And they took up arms, not because they wanted to, but basically because they were forced to. It was like, well, am I going to take this another day or am I not? So I think I'll leave it at that, give it back to you, give me some feedback. But I think the big picture is that it's not a U.S. phenomenon, although with the reserve currency, it's a worldwide phenomenon where not every, but that 3 or 4% that we need to make the paradigm shift are really questioning the status quo. What's really going on? Am I really free? What's the monetary system all about? What's the root cause? And these type of questions, which you've been asking and doing a great job, in my opinion, for these many years now since we first connected.
David, thank you. It's very kind of you. When you said it doesn't take a large percentage, I don't quite understand the point that I'm about to make, right? You probably understand it better, but prices get made at the margins, or they get influenced at the margins. Like, somebody can come in, especially of things like oil. And I think also for silver, although the silver market is so heavily manipulated. Do you want to say something about the manipulation and also what I've said about prices being, they really happen at the margins?
Yeah, I think we'll start with the market determines the price, and it is at the margin. I think the best way to understand it is what everybody's pretty familiar with, even if they've never been to an auction. But if you go to a Sotheby's or a local farmer's auction where they're auctioning off horses and cows and pigs, doesn't matter. The process is the same. And the process is that you put up the item for sale, be it a car, be it a horse, or be it a rare piece of artwork. And it's in a free market. It's an open outcry bid system, or can be that, which means that the auctioneer will start with this piece of art and say, and in those cases, sometimes there's a minimum bid, but let's just say there isn't. It's open, totally free. So someone bids, $5, some 10, someone says 15. So at the margin means it's the last bid that takes the prize, and that is at the margin. So there might be 80% of the audience that'll buy this artwork for 100, but only 70 that'll buy it for 200, and 50 that'll buy it for 300, and 30% that'll buy it at 500, and 10% that'll buy it at 1,000, and only one person is going to buy it at 1,200, and they get it because that's the margin. That last bid is the margin. So did that do a good job of explaining why the margin works?
That is an excellent job of why the margin works. And I'm reminded, David, of how much I learned from you back in 2011 when I was looking at what is this thing called money? Who decides that pounds have value and dollars have value and where do they come from and what's gold and what's silver. I learned so much from you. So I would recommend anybody who wants to learn more about gold and silver and money in general, and particular silver, because silver is much prettier than gold and it's much prettier than Bitcoin, that to go follow David and check out his website and also your YouTube channel or via your website. Now, let's start with some basics then. Why is gold and silver and Bitcoin, why are they money?
Well, Aristotle put out years ago, what the classical definition of money is. And I still really think that he pretty much nailed it. I mean, basically, it's got to be fungible. Fungible is a word most people don't know, but fungible just means that every piece of gold or silver or whatever it is exactly like the other one. So you could have a silver ounce that's minted by Canada or Europe or South Africa or a private mint, and it doesn't matter what's stamped on it. An ounce of silver that's 9995 is fungible. It's exactly the same chemistry, weight, etc., as the other ounce. So that's fungible, so interchangeable. It has to be divisible. Divisible means you can take that coin and cut it in half and have a half ounce. Take that half and cut it in half, make a quarter ounce. Take that quarter ounce, cut that in half, have an eighth ounce. So money's got to be fungible, divisible, recognizable, and it's got to be inherently scarce. In other words, something like air wouldn't really serve well as money. And there's a lot of assets that have intrinsic value, such as real estate or land or oil or almost any commodity. The problem is that oil, for example, isn't fungible. West Texas Intermediate is like champagne, and what comes out of Venezuela is like a glass of mud in comparison. So all oil isn't the same. It isn't fungible. So that is basically the definition. I left probably a couple out, but that's what gold, silver, and really platinum, palladium fit that definition. Although I will admit that in today's reality, you do not really consider platinum or palladium to be money. But as far as being having a classic definition, they do adhere to it.
Right. Now, just a few others, right? And just on fungibility, it pretty much almost applies to Bitcoin. Bitcoin's fairly fungible, and the reason why it isn't is because you send me one Bitcoin, that may have a different history because each Bitcoin carries its history with it to a Bitcoin that I already have or somebody else sends me, or the one I send you, David. But Bitcoin's fungible. Right. Then also gold and silver are portable. So you've got to be able to transport it. So, which is why we don't use trees as money because they're not very portable. Divisible. So you can divide Bitcoin, gold, and silver up into smaller components. Durable. And I know there was a state in the United States where they used tobacco leaves as money for a while. But tobacco leaves, they decay. So they're not durable, whereas gold is forever. So fungible, portable, divisible, scarce. It has to have agreement. So I think gold has universal agreement. If anybody here wants to send me an ounce of gold, I won't be upset. I'll take it. And I know certainly in Britain generally, people don't recognize the value of gold. But you go give gold to somebody in Nigeria or India or Argentina, they'll happily take it, no problem. So there is an agreement as well. It's recognized, and the market gives you value.
Right. And the last one, I hope I didn't interrupt, is really the last one is the most important one. Money, to be money, it has to have a store of value. And that is money allows individuals to hold wealth over time, preserving its purchasing power and deferring consumption. And that is what gold has done at this point in time a little better than silver, although silver has done it. I was on a podcast, I guess, yesterday, and someone was saying, well, what about silver or whatever? And I said, well, take a dime to, the grocery store. And today in the U.S., a dime is worth something like $2.30. I might have that wrong. I have to look it up. But just round it up to over $2, under $3, Well, that's like 23, 30 times its face value. So has silver done its job? Not to the extent that gold has. I admit that. But nonetheless, it certainly buys pretty much what a dime would buy, let's say, when I was, a 10-year-old kid. Yeah. So anyway, that's the most stressed point I've made over the years, or at least you can give me some feedback, that I've tried to instill in everybody's consciousness about money, is
Yep.
that money has to be a store of value. If it is not, and it depreciates over time, which all fiats do, and all fiats in the past have failed, which pretty much shows us the path the US dollar is on, then what do you do for your savings? And what I've taught from the beginning, or at least given my best effort, is if you're going to save in money, and everything else you can do in fiat. But if you're going to have a bank account, you become your own gold standard or gold and silver standard, and put those coins away. And I was talking to someone here. I'm working on my house. I may be selling here soon. Not to get too personal here, but I was talking when things weren't, let's say, it wasn't my best year financially, but I was still buying 1/10 gold coins. But the gold price was like $300 an ounce back then. So, I've been at this for a long time, as you all know. And so those coins were really a high markup because a 10th ounce takes almost as much time, effort, and energy as minting a 1 ounce gold coin. So you pay a premium. So it was like $300 for the spot price of gold, but like $340 for the 10th ounce coin. But I was buying them. That's what I could afford. And I was, very diligent saver. Well, those same coins now are $350 each. That's a
Wow.
10 bagger in my lifetime. And we're not done yet. So it proves my point. It's a store of value that will buy me the same amount of goods and services, or perhaps more, than when I started saving them. And that's what most people don't understand. Is what's happening. I'm not getting as many. My bag of groceries for 100 pounds is now half a bag of groceries or whatever it is. Okay, I know what it's like here. I just ordered just kind of some basics, and it was like $79, no meat even. And I am a carnivore, at least part time. And I couldn't believe this little bag that I'd paid almost $80 for.
Yeah. No, I completely get it. When I came to the UK in 1970, my mum, my dad, my brother, my older brother, my younger sister, we'd do a weekly shop, fill a whole trolley with £5. £5. Weekly shop for 5 people. And now,
Yeah.
same trolley be about 200 quid. And it isn't that the things have got more expensive. It's that the pound has lost purchasing power. It's not a store of value. And I must keep on my wife about this. It's not store of value currencies, right? And that's because they lack scarcity. But there's also something else about money, I think, David, which is money, gold, silver, and Bitcoin. It's tokenized energy. It's the effort that goes into mining Bitcoin or mining silver or mining gold, represented in a unit of one of those items. And currency, like the pound, like the dollar, like the euro, like the rupee, like wherever, all these government issued fiat currencies, they lack scarcity, and they're not tokenized energy, because they, just push a button and off you go. We're not even pushing a button, because of you take out a loan, you're creating more and more currency. Every time you use your credit card, you're creating more and more currency. You speak to that, please, David.
Well, you're right. I
Agree
mean,
with me, by the way.
I'm sorry. I talked over you. Say it again, please.
Sorry, you don't have to agree with me, by the way, David.
Oh, yeah. Well, the idea of energy, I think, is the most important topic. I mean, I've got the documentary filmed. I'm not completing it yet. We hit a bit of a snag, but I'm working on it. And just a shout out to the UK. Lots of friends over there, and you guys always treat me so well when I'm there. And really, some of the best memories I have through this journey of mine has been in the UK. Having said that, I have a friend there that's probably going to finish the film for me. But coming back to energy is what makes the world go round, not money. I mean, you often hear money makes the world go round, and that's what we think. I mean, our labor is exchanged. Our labor, be it physical or intellectual or a combination thereof, is based on that exchange for money. And without money, we can't go grocery shopping. So it's common to believe that money makes the world go round. Actually, the truth is that without energy, nothing happens. Without photosynthesis, you don't grow a vegetable. Your cow can't eat the grass. I mean, so everything is based on energy, and without energy, you really can't grow food. You can't transport food. You can't harvest a crop, and all of that. So energy is really at the top. It's the most important. And so when you say that money is a store of energy, certainly it is. And unfortunately, in a way, it'd be nice if you could take that energy, back out of, coin of any type. On the Bitcoin side, the mining of Bitcoin is something where you've got to be just like a gold mine or a silver mine. You've got to be at a margin, so it's the last bid, but you also have to have a margin in the other sense of the word, meaning there has to be a delta or a difference between the cost of mining and what the market price is, the market value is. So, for example, if I'm a gold miner and it costs me $2,000 per ounce to mine an ounce of gold, and the current price is $3,000, then I've got a $1,000 quote unquote dollar margin. But let's say it's a new mine I just started and the grade's not very good and it costs me $4,000 to mine and the price is $3,000. That's a negative 1,000 and I'm out of business. So I've either got to mothball the mine, suck it up and run it at a loss because I think that, if I dig deeper, I'm going to get higher grade and I'm going to turn it around and I'm going to go on. Those are, outside this discussion in a way, but just kind of rolling with this. So that's true gold, silver, and Bitcoin. And with Bitcoin, what has me concerned, and I voiced this last time we spoke on it, is that the largest miners in the U.S. Marathon Riot, their costs all in now, not the way they put on their financial statement, which is legal, lawful, and correct if using the accounting rules. But if you analyze it like I would analyze a gold or silver mine, and I put in other costs that really do affect the bottom line, they're pretty much close to just above margin now. And this is why it's interesting to me that if you analyze it from the top down, you say, well, what is a Bitcoin? Why would I want one? And how do I get one? Oh, I mine it. How much does it cost to mine it? And I look at that, I find that the margins on Bitcoin are not as strong as the margins on most top tier cash rich unhedged gold companies, which is interesting. And I'm as free market as they come, or at least I think I am. I try to walk the talk. And if you're, into Bitcoin, that's fine with me. What I would ask you to question is balance. I mean, if you're going to balance your portfolio and you're overweighted Bitcoin because you bought it at 17,000 when I called the first top, and it was, but then it, bounced down and came back up. You might want to rebalance your portfolio, not meaning you sell it all, but the idea that it's going to continue up forever, I disagree with, and I'm in good company because a lot of gold bugs think the same thing or say the same thing. No tree grows to the moon. Eventually, there will be a plateau for gold, for silver, for wheat, for housing, for whatever. And Bitcoin is not exempt from that. Now, is that at 200,000, 500,000, a million? I don't know. That I can't tell you. What I can tell you is that there are cautions out there. And the amount of power or energy, which again is the most important thing we discuss, is getting, instead of, I would say it's getting less efficient. Solar panels are more efficient than ever, but the demands are incredible with this AI situation, further Bitcoin mining, if you extrapolate that out, and the need for electricity in countries that don't have it. So we're not at a point where we have an abundance of energy. In fact, we're probably going to be underserved, which means we're going to have to look at the energy equation here in a very significant way. And energy costs are probably going higher, even though I follow the oil market carefully. I know it's low now, but it concerns me the projected demands that we'll need for the new technological paradigm to be ubiquitous worldwide and adaptable for everyone versus what the ramping ability is for the current technology.
Right, well, you make a good point there because it leads on to how silver is the second most used industrial commodity after oil. And unlike gold and Bitcoin, well, Bitcoin gets lost, but silver gets consumed. Gold doesn't get consumed because it doesn't react with anything. But silver is used in solar panels and hybrid and cars, and you need it for data centers and also in weaponry. You need silver for all this high-tech weaponry. So then I would expect that the price of silver would keep going up, but it doesn't, David.
Silver is very, very difficult to analyze as far as almost anything. Well, it's not hard to analyze the mining part of silver. It's not that hard to analyze the history or things like that. But as far as the price performance versus the demand side, it does drive you crazy. I mean, there's a lot of talk now about silver being in a structural deficit for the last 4 years, and uh,
So then,
people.
what do you mean a structural deficit? What does that mean?
It means that the amount of mining and the amount of recycling produces about 1 billion ounces of silver on an annual basis, but the total demand on silver is 1.2 billion ounces. So we're running a shortfall of 200 million ounces on an annual basis. Round numbers, it's varied about that amount for the last 4 years. So that's an 800 million ounce uh, amount of silver that's had to be eaten from the above ground stockpiles. So the above ground stockpiles of silver is actually going down at this point. Sometimes it ebbs and flows. Sometimes it builds up, and you can call that a surplus if you want. And then sometimes it's eaten up, which you could call a deficit at times. And and you would think if it was wheat or oil or soybean meal or soybeans, and that was the case, you would see a direct relationship between the deficit building and the price increasing. But in silver, that just isn't true. And the reason I know it isn't true is I'm studying the market so hard. From 1990 to 2005, for 15 consecutive years, there's a structural deficit in silver of 100 million ounces on an annual basis. So you multiply that 100 million times 15 years, that's 1.5 billion ounces of silver that were eaten out of the above ground stockpile of silver. You say, oh my God, that's a lot of silver. And it is, it's a lot of silver. And luckily, there was 2 billion ounces at the start of that deficit. So you basically went from 2 billion ounces of silver sitting in a pile over and over there, and after 15 years, it was down to 500 million ounces. So had that continued another 5 years, in theory, you would have been out of silver, which will never really be out, but in theory, you would have been. Well, what happened around that 2000, really around the 2000 level, year-wise, 2000, 2001, China came into the picture and started demanding a humongous amount of commodities across the board: foodstuffs, industrial products, precious metals, ferrous metals, iron ore, all of it, oil, everything. And that really was an impetus to start really gearing up the mining industry and factory, everything that took place. And when that took place, then we started to really mine a lot harder, and we saw the inventories build up. And so I said all that to say that last time that the market had a 15-year structural deficit, the price barely moved. You can look at the deficit chart versus the price chart, and it just doesn't make any sense. In fact, the Silver Institute put out a paper on it recently, basically outlining what I just told you. And it's like any economist that's got a bachelor's, a master's, or a PhD is on this is going to be scratching your head. Why does silver act differently than everything else does? And there are reasons, but I don't know if I want to dive into those or not. But this time around, I think it's different. Why is it different, David? Because I think people understand basic economics, and when this takes place over the next couple of years, somebody like a Tesla, an Apple computer, Samsung, solar company, an EV company, even someone building chips. I mean, 44 million ounces of silver go into the chip industry. So someone's going to say, you know what, I don't want to be caught short on silver. It's my livelihood. If I don't have it, I can't build a processor. I can't build a computer, or I can't make a solar panel, or I can't build this car, or whatever it is. I'm going to buy it and I'm going to hold it because it's not as dense as gold, and yes, it's very cheap compared to gold. So volume wise, it's a lot more for the same price, but it's still very essential. And so you could get in a point, and I believe this will take place in the future, where you have competing demand. You have demand for industry just to stay alive. Like, the pile above ground is shrinking. I better get it before it goes away, theoretically. And the demand for, it's 300 quid to fill up the trolley. I better save some silver here so I know that 6 months from now I've got enough purchasing power to feed the family. So when you have a monetary demand which is at the margin. I'm going to pay damn near anything to preserve my purchasing power. And an industrial man, that if I don't have this, I'm out of business. Competing at the same time, you're going to see a demand side of silver that we've never witnessed before.
Which would suggest that there will come a point where the silver price will just shoot up through the roof, because the demand for physical is outstripping the market's mechanism for suppressing the price. Do you want to please say something about how the silver price is suppressed? I'm not sure everybody knows.
Yeah, well, it's true in all the commodities, but more true. It's like the animal farm. All animals are created equal, except some animals are more equal than others. One of my favorite lines. But I digress. All the commodities are basically derivatives markets: oil, soybeans, the metals. And so what you're really getting is a price for a contract. You're not getting the price of the metal. Although, in fairness, it's close to it. So if oil settles at $65 a barrel, then someone that wants to buy it at that price in the physical realm usually can buy it for that price. So the market works until it doesn't. But when you have a paper derivatives market for any commodity, and you can produce an infinite supply, or an infinite amount, I should say, that projects an infinite supply, then obviously the price is going to be low. So if you've got silver and the total amount of silver is X, and I can produce a paper equivalent of 10X, then that shows it's very abundant. And why would I have to pay very much for it? There's so much of it, it's got to be cheap. And that's very, very broad brush. It's a lot more detailed than that. But that's the general idea, which we need to know. And that's why you'll see silver and other commodities really moved around price-wise, especially at certain times, like on options expiration. You can almost wind your watch or set your watch on options expiration, the precious metals, particularly silver, that depending on what the current price is, it's going to be under that going into options expiration, because the banks do what's called delta hedging. And delta hedging is just an algorithm that says, well, if I need to move the price here, I need to sell this much on paper. And so if they have a goal of making silver be under $33 an ounce, like what happened last Friday, then the algorithm will say, well, we got to sell this much. They sell that much, and they move the price. I mean, I hate to sound so cynical, but I've been at this a long time. That's the way it really works.
Yeah.
But, a lot of people, and it upsets me in a way. I'm going to vent for just a minute. I'll keep it for a minute. That so many that are, smarter than me, whatever, and just refuse to acknowledge that. They just say, well, it's not. They indicate it's basically a free fair market. It's not. And to go a step further, I proved in my book, The Silver Manifesto, when I went through and made that chapter on the manipulation. And I used the Sharpe's ratio. I'm not going to go into it. It's a little hard to explain, but if you want to, if you're a student of the markets, you want to learn something new that you haven't heard before, you already know what I'm talking about, but just put in SHARPE ratio into a search engine and read about it. Well, when you look at the Sharpe ratio at the Bernie Madoff affair, it was X. I forget the exact number, but the Sharpe's ratio in the silver market is well above what it was for the Madoff incident. So I could basically, I think, prove to an open-minded audience that there is no doubt this is not a random walk. This is not a free market. This is not a open system where the market determines the price.
And just in simple terms, what is the Sharpe's ratio?
Well, let me look it up. I don't want to misstate it. I know
I'm looking it up
what it is, but I don't know how well I can articulate it.
I got it. It's a financial metric that measures the performance of an investment compared to a risk-free asset after adjusting for its risk. It is calculated by subtracting the risk-free return from the investment return and dividing that by the standard deviation of the investment returns, indicating how much return an investor receives for each unit of risk taken. There you go. I think I understood the first part of that, but this is why you should never, ever take financial advice from a social worker, because that's what I'm trying to do.
I'm going to try to go a little bit beyond that. I'm going to see, because you did give the definition. We got it at the same time. A Sharpe ratio itself doesn't directly reveal if a market is manipulated, but it can be a red flag if used inappropriately or if consistently shows exceptionally high values with unclear justification. A manipulated market might lead to artificially inflated returns seemingly high, Sharpe ratio, but it's likely to be unsustainable. The ratio is primarily used to assess risk-adjusted returns, not necessarily to detect market manipulation directly. And see if I go a little further.
So I don't want to get too stuck on it because there's a few other things I
Yeah,
want
I
to ask
don't
you.
either.
You can look it up.
Right.
It's generally a way of assessing the risk of a particular
Yeah.
asset. Okay.
Yes.
All right. Now, the market, the silver market, I believe, is heavily manipulated. And in order to, I think it fulfills two functions. One is to keep the price artificially low to allow industrial users to sweep up physical on the cheap, but also because it would break the currency markets, I understand. Can you say something about the second bit?
Well, I did a video which you can look up. It's still on YouTube, and it's titled something like "Silver is the Achilles heel of the entire financial system." I think that's pretty close. If you type that into a search engine on YouTube, you should be able to find the video. So if you look at the historical side of the monetary system, the world was really on a silver standard more than a gold standard up until, excuse me, I'm sorry, excuse me.
No
It
problem.
was on a silver standard up until the Chinese left the silver standard. And so silver and gold are really the best money. In fact, a bimetallic standard where you use both silver and gold, let the market determine the ratio between them. An ounce of silver is an ounce gold, or 17 or 10, without a fixed set amount by government. You have the best free market money that's ever existed, although the gold-silver ratio is usually set by government. So the point is that silver is the poor man's gold, and that banks have nothing to do with it. They disendowed silver as money in 1873 officially in the United States. So the banks have no silver holdings at all, with the exception of maybe India, but it's such a small amount, it wouldn't mean much. So what happens is that we have got a situation where we've got the people's money held by the people that could potentially rock the boat. Why? It's such a small market. Because what we've already talked about. If it's required for industry, and let's say all that above ground stockpile is held by investors, nobody in the industry has warehoused it. And Tesla's out of business, so they don't get it. And it's in strong hands. Then what happens? Well, they got a bid. Remember what we started the program with? Talk about at the margin. So you bid $100 an ounce. Nope, not selling it. No one else wants to sell it for that price. Okay, $200 an ounce. Nope, I don't want $200 an ounce in your fiat for this precious silver. And if you don't have it, you can't build another Tesla. I'm exaggerating for the point, but I'm making the point. And so therefore, who's going to sell? Some say, all right, 250. Yeah, you can have my silver. So that amount of silver at 250 fiat, US dollars or quid, whatever, there you go. And it continues like that. So there is a potential that the silver market itself could, not necessarily would, be an X factor that no one really gives much credence to. The banks have blown it off. The financial system at large certainly has blown it off. Any major fund manager, sovereign wealth fund, family office, insurance company, pension holder, whatever. Why would I want silver? And that's just the time when the smart public will want it because no one else does. And then when it's absolutely so required or technology stops, again, that's a metaphor, an analogy, it'll never happen. But it could certainly slow down to the point where we get into like the great meltdown like we had in 1980, where silver, does shoot up straight up from, $15 to 50 in a matter of a few weeks. We get into that kind of a mode again that you already outlined. Well, if that happens, David, the price is just going to go up and up and up. And that's kind of typical of the silver market. It sleeps and does nothing. I coined the phrase silver will scare you out or wear you out. If you're short, it's going up, 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 up. It's going to scare the heck out of you. But if it just keeps going sideways and not performing as well as gold, it's just going to wear you out. You're going to say, I just don't want to participate in this market.
Okay. Now, looking at the chart about when it shot up, it was in 1980. It was just under $50, and then again in sometime, I think, was it 2012,
2011, the
2011,
last day of April 2011. Yep.
$50, and right now it's around about just under $33. And looking on the chart, it looks like this massive cup and handle, multi-year cup and handle. So that should it break above $48, $50 again, then we could be off to some serious races, David.
Well said, and that's the truth. I mean, once we get at that level again, then it's anybody's guess at what the bid offer will be. I mean, some people will probably, I think it's going to stall out at 50 for a small amount of time.
Right.
I think people that are really, really just tired of the market will say, oh gosh, I'm back at 50. I bought it for 30 average price. It's not a big enough, it's not the profit I expected, but it is, I'm out. So I think there will be some of that at that level. Could be wrong. I'm pretty good at these markets, but not perfect. No one is. But that will last for a short amount of time. I don't know, call it 2-3 weeks, a month. I don't know. Let's just say I'm right. Let's make that assumption. Then the next time through, it goes to 50, 55, and it doesn't come back. Then we're off the races. So we're off the races either way. Either it goes through and keeps going, as you suggested, Mike, if I heard you right. And if I'm correct with my forecast, it doesn't really matter because it'd be a matter of probably a few weeks and I'd be doing that anyway. And that's where people really, really start to control the market. The market becomes free at that point. Why? Because what I just said, it's owned by strong hands. And when a market makes a new high, especially when it's been in the situation that silver has for decades, that people that own their grandfather's silver, they hold 2 bags of junk silver because their grandfather owned it and went to their father, and now they own it. It's going to hold it. They're going to say, well, now how high is high? It just went from 50 to 60 in 10 days. So they hold it. They don't want to sell because they don't know how high it's going to go. So it goes from 60 to 70 in 2 days. Now we're in an exponential function. We're really, and so maybe they sell it at 70. Some will, as an example, but not everybody, because the majority is going to say, well, how high is high? What's it going to do next week? And all of a sudden the exchange stops. Exchange says we're no longer going to deliver silver. You can hedge, you can sell, but you can't buy, whatever. And away we go. So there was a gentleman a long, long time ago. So here's a story, but it came from one of my best clients, and I believe he was a very large trader on the COMEX. And he said years ago, there's a gentleman, and this guy was a technician. He said the ultimate price for silver was $200 an ounce. I'm not saying he's right or wrong. Here, $200 an ounce back in like the early 80s was like insane. It couldn't be that much. I mean, silver, after it peaked at 50, it came right back down, and it actually went back down to 5 for a long time. So probably talking too much here, but I'll give it back to you. But I mean, we don't know. Only the market knows how high it could go. And that's where I will watch the ratio to try to get a feel for it. The best gold silver ratio in favor of silver in this bull market so far has been about 33 to 1. And I think when the market peaks, it'll have to be better than that, which means 30 to 1 or 20 to 1, or the classic monetary ratio of 15 or 16 to 1. I've even written in the past, it could get to 10 to 1, where 1 ounce of silver buys, it's a 10 to 1 ratio. So an ounce of gold is worth 10 ounces of silver, vice versa. Will it get to, I don't know. Will it get to 33 to 1 or not? I don't know. I do believe that to be the bull market that I expect it to be, it would have to improve that current 33 to 1 by some margin, whether it's just a couple ticks or by a factor of 2. I don't know.
Okay, well, 30 to 1 would mean silver would be about $100, very roughly. And
Right,
then
that's right. Yep.
what I know about TA, and everybody please, I don't trade. I can read charts, or more accurately, I think I can read charts. But a cup and handle from $5, a bottom of $5 to a high of 50, that should that pattern break, we're looking at $95, which is close to your 30 to 1 guesstimate. So then, David, when silver $50?
Yeah, when 50? That's a good question. Well, I think, first of all, by studying markets, not just the metals markets, but all markets, the propensity is to do the last gasp at the end of their cycle. So you'll see it in real estate, you'll see it in stocks, you'll see it in commodities. So that's where I got this 90% of the move comes in the last 10% of the time. So we've had a gold market really from 2000. The silver market really didn't break out until 2003. But if we just use 2000, we're 25 years into this market. So let's say that we're almost at the end, and I believe that we are. So let's just take 10% of that. So 25 years times 10%, we're at 2.5 years left. So that puts us in 2028 from today. So, or let's just back up and say the gold really broke out here recently, as we all know. Silver hasn't followed yet. But regardless, we've got 2 years, 2.5, 3 years left in my view, which means if we're going to get to 100 or 200, we've got to get to 50. So when does that happen? And I'd say it doesn't happen this year, although it could. It can't rule anything out. So 2025 is out. So 2026, already analysts are calling for 40. Well, 40 right now, with gold at 4,000, still 100 to 1 ratio, which is still showing silver is well undervalued. But so I would guess, and I will say guess because I always get criticized. You can always say a price, but you can't give a time. Or you can give a time and not give a price. But if you put the two together, you're going to be criticized. So be criticized many times. I would say probably in mid 2026-ish, you'll see that level. And again, to just reiterate what's so important is once you reach that level, then all hell breaks loose. We just don't know. Because again, if the industrial side hasn't stockpiled enough to stay in business for 6 months to a year or 2 years, and investors say everything else is failing except gold and silver, gold's at 4,000, I can't afford it. I've got $4,000 to invest in precious metals. I'm buying silver, which is what will take place, at least for some of the participants in the market. You could have that double edge where I've got to have it or I'm out of business, or I got to have it or I can't feed my family. And those two synergies come together. You really can't put a price on it. The market, of course, will, but we don't really know because you could get to a point where it gets overvalued, and that's what I think will happen, where that ounce of silver historically bought you, X amount of bushels of wheat, and now it buys you 3 times that amount. And that's what I'll be looking for to determine if we're overvalued and the time to sell. Now, will I recommend to sell it for fiat? Not necessarily. That'll be the hardest part of my job. First of all, calling the top. I'll be ridiculed by people that love me now. And they'll say, David's lost it. He's drank the Kool-Aid. The bankers bought him off.
Listen to that social
I know here. I'll be disparaged like never before, but I've called every top so far. So pay attention. Not saying I'll call the next one, but that'll be the metric. And so then what do you do? And that's the hard part. Well, what's undervalued? Well, everything's undervalued to silver because it's overvalued. So what's undervalued to fiat or whatever. Well, is it the stock market? Is it the bond market? Is it land? Is it raw land? Is it real estate? Is it a business? Is it automobiles? I mean, I'll be looking at all that stuff and trying to do my best to navigate people through it. But I would not suggest the fiat system unless it's changed, which it very well could be. I mean, I think there's a race right now between the metals market doing what I'm suggesting and a new reset where we're in a digital lockdown world where currencies, where it's a cashless system and it's determined by a public-private relationship with the JP Morgans of the world controlling the monetary system from a digital perspective, that they know everything that you buy and there's no way out.
Okay. Well, I think that when the price does start moving up, I don't think it'll go back down. I mean, it will eventually, right? But I really do think it's going to overshoot. And I base that on all the problems that are showing up in the within fiat currency. Because once they lose the ability to suppress the price through futures, then what are they going to do? And then I'm kind of hopeful, David, that it gets too expensive, that this whole net zero climate scam, which we're still suffering from in the UK and in Europe, will fall apart because there isn't enough affordable silver for solar panels or wind turbines or all the infrastructure that we need for biometric digital IDs and CBDCs. And I know you and I, we did a video about this some time ago. Do you want to speak to that?
Well, on the silver side for solar, I mean, I looked at this years ago and I did a study and I was going to publish it, but a couple guys already had done it. So I was basically verifying their work or they were verifying mine. And the amount of silver required at the current technology, and that was a couple years ago, that's improved. But round numbers, there wasn't enough silver on the planet to power, there was just enough silver on the planet to power the United States residential section. If you wanted to power all the United States, which means industry and residential, it would take 2 times more. And that silver doesn't exist. So you could not power the United States on solar with the current technology, using all the above ground silver available. Couldn't be done. So how are you going to power the world on solar? Well, let's make it wind power as well. Okay, fine. You know, it doesn't use that much silver compared to a solar panel. But regardless, there just simply is not enough silver to do the green energy. And so you got to allocate it for where its best and highest use is. And its best and highest use is actually its money. But no one will believe that unless they really study markets. They'll say, well, the best and highest use is solar. But that comes back around, which I didn't actually add on to what you said earlier about, you know, price suppression. Well, if the industry wants silver to be cheap, you know, they will use the paper markets to keep the price within a manageable level. Silver is the only commodity that's ever had a users association. And you can't find it anymore. I think they wiped it off the web, but for a very long time, the Silver Users Association existed. And their mandate was to just do what I said. And these were your Dow Chemicals and Kodak, which no longer really is anything. But at the time, there was a lot of silver photography, as some of our older listeners will know. And so any large user of silver band together to make certain that the price stayed within a level where they had very high margins on their products, their industrial products. So let's not treat this as money. So to prove the point, if you did a chart that was 52 feet in length from left to right, and you looked at the gold-silver ratio, the gold-silver ratio would stay around 16, no higher than 20, for every foot of that 52 feet except the last foot and a half. So for 5,200 years, you've only been in the last 150 years where the gold-silver ratio was above 20. Why? Because for that 5,200 year, less than 1.5 is money only. Silver and gold were money and only money up until the technological era. And once that happened, then silver became too valuable to be money, as Johnson said when he took us off the silver coinage in 1965. And here comes the Silver Users Association, and away we go. So there's a lot about the silver story that most people don't understand, don't know, and probably will never know. Because, you know, I mean, back in the day when silver actually was outperforming gold during the first 10 years of the bull market, from roughly 2000 to 2011, I was on nationwide financial channels a few times, and people were, you know, interested in silver and all of that. And of course, it did a very good job during that 10-year run. But that's rare. You just really don't see. I mean, when's the last time you saw a silver analyst on one of the main financial channels? You see gold people, you know, talk about gold, or they'll talk about the cryptos, or they'll talk about some of the other alternative investments. But you haven't seen anybody on the silver side in a very, very long time.
It's almost like it's deliberately kept quiet so that we don't cotton on to the value of silver. And then we don't start competing with the monetary players and the industrial players who want the silver all to themselves. Anyway, that's just my conspiratorial comment. David, I'm going to ask you to please remind people where they can find you. And I'm going to, so that, because we need to finish up. And if there's anything else you want to say before we do finish up.
Yeah, a couple things. Really, the best place to follow me is on X because it's at SilverGuru22. I don't know if you can find me by my name or not, but at SilverGuru22, that's my handle on X. Got like over 100,000 followers now, so thank you for that. And that's where I post what I used to post on Web 1.0. I managed to get up at very early in the morning and go through all the financial news and pick out 3, 4, 5 at the most articles every morning and paste them into my website by myself. Those days are long over. But if I find something that I think is important on the metals markets, the financial markets, crypto market, whatever, I'll just, you know, like all of us do, I will post it on my X feed. And then, of course, I've got a lot of friends that are in the same space I am, and I'll repost some of their stuff, which is very good. So that's the best place to find me. And the other thing is to get to themorganreport.com, get on our free email list. If I ever get banned from YouTube or X or any of these platforms, if you're on my mailing list, I own the server. So you're not going to get banned. I'll be able to stay in, you know, communication. And the last thing is the documentary. The trailers are at silversunrise.tv. And you can watch the trailers, and hopefully we'll have this project wrapped up in about 3 months. That's my guesstimate. So June, July, August, we'll shoot for the beginning of September to have the documentary out. Of course, I'll send it to you, and I want you to view it once or twice, and then hopefully we can do another Spaces or be back on your channel and talk about why the Silver Sunrise is looking for us, we the people, to overcome the power, control, and fear of money that's held by the elite banking system over we the people.
Great. David, thank you so much. Thank you. And this will be posted on my channels on ODYSEE and Rumble and YouTube and 3Speak and Brighteon. And thank you to the Coin Republic, coinrepublic.com, for hosting this crypto space. I will be back, not this week, but the week after, with another fabulous guest talking about some issue or other that impacts on the world of crypto. Once again, thank you, David. Thank you, everybody. All the best. Bye-bye.